course, our top story tonight is the continuing massive instability on Wall Street.
Sonny, there's only one word to describe what's happening, and that is panic.
Dow Jones, in fact, has lost more than 4%.
At one point, the market fell as if down a well over 700 points.
In 1929, America panicked as it suffered the worst economic crisis in the nation's history. Thousands of people flocked the streets and banks as they all attempted to withdraw the money that they had stored away. Unfortunately for them, the banks had also lost value and were therefore unable to return to the citizens the money that was rightfully theirs. What event could have possibly led to millions of people losing their jobs, hundreds of banks going bankrupt, and the worst economic conditions in modern history? Over the course of 2 days, from Monday, October 28, 1929, through Tuesday, October 29, 1929, the Dow Jones Industrial Average fell 23%. These 2 days are known as Black Monday and Black Tuesday, and are often known as being the start of the Great Depression. How possibly could a 23% decrease in the value of the stock market affect economic conditions so greatly? Ever since the Dutch East India Company established the Amsterdam Stock Exchange in 1602, joint stock companies have been the leaders of the world economy, influencing everything from global trade to the discovery and eventual independence of America. It is impossible to fully determine whether stocks were relevant before the mid-16th century, although some historians and economists speculate that there may have been shares of companies traded as early as 1250 BCE. What is agreed upon by many, if not most historians and economists, is that the first major joint stock company was the Dutch East India Company, also known as the VOC, an abbreviation of the company's name in Dutch. The Dutch East India Company was a charter company established in the year 1602. States General of the Netherlands gave the VOC a 21-year monopoly in order to carry out colonial trade in Asia. The VOC dominated all rivals it had in the Asian trade and sent close to 1 million Europeans to work in the Asian trade. This is compared to the rest of Europe, which sent only a combined 882,412 people. The Dutch East India Company continued to rule over and make massive profits from Asian trade for almost 200 years until it started to dissipate in the late 18th century. Due to its overwhelming size and power, the VOC became highly corrupted, leading to its eventual bankruptcy in the year 1800. Although it ended in corruption and bankruptcy, many good things did come out of the Dutch East India Company during its lifetime, with one of the biggest being the rise of the stock exchange. Due to the influence the VOC had on the entire trading world, many companies all over Europe decided to become joint stock companies, or companies which sell shares to wealthy investors in order to expand their capabilities. Due to the struggle between Britain and Spain over the New World, the English Parliament was hesitant to spend money in colonizing the New World. In place of government funding, many joint stock companies formed to gather funding for colonization through the sale of public stock. These companies, along with religious groups trying to escape England for religious freedom, are largely responsible for the New World colonization in the 17th century. A combination of the Joint Stock Companies Act of 1844 and the Limited Liabilities Act of 1855 made investing in joint stock companies an extremely safe way of investing money. After 1855, if a person invested in the stock of a company, therefore owning a portion of that company, and the company went bankrupt, the investor could only lose the money which he or she invested in the company, and no more. On May 17, 1792, 24 stockbrokers gathered outside 86 Wall Street to sign an agreement establishing rules for buying and selling bonds and shares of companies. The paper they signed was known as the Buttonwood Agreement, and signers later drafted their first constitution on March 8, 1817, naming their organization the New York Stock and Exchange Board, later shortened to just the New York Stock Exchange. Today, the New York Stock Exchange is the world's largest stock exchange, encompassing 27 of the 30 companies which make up the Dow Jones Industrial Average. This is the main reason why the stock market crash of 1929 was so detrimental to the United States. The world had come to rely on stocks as being the basis of its economy, similar to how salt or gold have been in the past. Since the first stock exchange opened in 1602 by the Dutch East India Company, Stocks have helped companies expand, monopolies form, and individuals become extremely wealthy. From the colonization of America to the Great Depression, the idea of stocks and joint stock companies has played a major role